This is Rzecz o prawie, the thing about law. Let's talk law, let's discuss about law, and a special edition in English. My name is Paweł Rochowicz, and we are going to talk today about transfer pricing. What is it? It's a special area of law related to taxes. It is being said that taxes are one of the most important or the most difficult areas of law in Poland. And on the area of taxes, there's a special area of transfer pricing, which is being said as most difficult. My guest is a special guest, a specialist on transfer pricing and taxation. Welcome, Mrs. Anna Wcisło, a partner at CRIDO, leader of transfer pricing team.
Yes, thank you. Actually, a co-leader, but the rest is correct.
Okay. Quite recently, you organized a international conference in Warsaw on recent developments in law and practice of transfer pricing and taxation. Well, for the start, let's define this problem. Mm-hmm. It seems to me that it's been a long game between taxpayers and tax authorities in various countries on how to fix the price of goods or services sold between related parties internationally. How to fix it so that the tax is as low as possible. How would you comment on such an optimization?
Well, thank you for that comment, and it is quite a very good introduction and very good simplification of what is basically transfer pricing. Because, as you said, this is a constant battle or constant discussion between the businesses and the tax authorities.
Or a fascinating game.
Or a fascinating game where the businesses, mostly the multinational enterprises, wanted to open new companies within different in different countries, want to set the pricing appropriately to the arm's length principle. So basically at the market level. And this is the challenge. What is the market level for a certain service or goods transaction or a financing transaction? And this is the issue, and this is the case constantly discussed with tax authorities on the local level, country level, and global level as well.
It's, I think it's a special problem about the services where you cannot say there is a fixed price like the price of, let's say, cucumbers or meat on the market, okay?
Yes, this is correct, because the services, you cannot buy a tangible service. It is an intangible issue. So basically the scope of the service, the nature of the service can be different in different terms of businesses. So this is the huge challenge, how to define the service and how to price it accordingly, and follow up from that, how to tax it in a certain tax jurisdiction.
Is that a good example that your services, advisory services, cannot be valued at average level? There's no average level of a good tax advice.
That's a great example. Of course, there is not an average service, and there are different pricing for different scope of services, even within the transfer pricing area. We help our clients to set the prices, but we also help our clients to document the price setting that they did themselves. So these are different scopes of services, and these are different pricing, how we can set them for the clients, also internationally. For example, when we do our services in a cooperation with within our taxant network, we can price the services differently, and this is an international cross-border issue, and the taxing resulting from the transfer pricing can be a game between us and tax administration.
Mm-hmm. Well, of course, old rule in business is that a good price is the price that the client can afford, can pay. Isn't it like that?
Yes, this is correct. But if the client is a related party,
that's a different story.
That's a different story, and this is a transfer pricing issue.
Okay, documentation, you mentioned. The documentation is one of the topics you focus on. When when we think about transfer pricing, we need to think about this game. This game is observed not only by local tax authorities, but also by international organizations. I mean, OECD, Organization for Economic Cooperation and Development, which set some standards as to documentation of the transaction between related parties. And it issued, well, maybe not only a law, but the general rules or general
Guidelines, I would
guidelines.
say.
Yes, guidelines for the member countries on how to define transfer pricing and what are the requirements. Would you agree OECD is even more important in this area, more important than our Ministry of Finance and the European Commission?
Well, that's a very tricky question. But when it comes to transfer pricing, I would say that they are more advanced when it comes to setting the rules or guidelines, as we agreed, for transfer pricing, because they have the international view of how the prices are set in different jurisdictions and how the different countries tax transfer pricing transactions. So they are the most advanced in terms of transfer pricing, and they actually give guidance that the local tax authorities follow when introducing their local law on transfer pricing.
What they observed is something like base erosion, the tax base erosion, and profit shifting. It's I would say, very diplomatic definition of what happens between countries and in big business. Can you say more about this BEPS guidelines?
Yes, the BEP or BEPS guidelines was introduced actually by the OECD in 2015. And it was a program that revolutionized the transfer pricing local rules, also in Poland, because this.
I would say Poland is even a cutting edge between.
Yes,
between
we are one of the.
states.
Yes, this is correct. We were one of the first that followed this BEPS program. So basically, this program was introduced to modernize the regulations on taxing transfer pricing, as well as other tax areas like digital taxation or interest rates or on financial transactions. And this program was introduced to, as I said, modernize the rules and to secure that taxing transfer pricing is again, more or less fair among all these countries who follow the OECD approach. And what's more is that the program also introduced, as you said, the standard for preparing a transfer pricing documentation. So therefore, all the multinationals have to adopt this rule to be within the standard. And they have to make some effort to have this adoption to the new rules.
As far as I know, the most important thing is to have a lot of documentation of the transaction between related parties. If you don't prepare this documentation, you need to pay very high rate of income tax. It's 50%, isn't it?
Under the Polish regulations until 2018, this is correct. You had to pay penalty tax rate for non-arm's length transactions if you did not have the TP documentation, transfer pricing documentation. So yes, this is correct, and the multinationals have to prepare it. Therefore, they have to engage either with tax advisors, as our firm, or they have to build their own teams to do so.
Mm-hmm. I would ask you about what it means in practice for a big multinational company or even small related companies from the viewpoint not only of law, but from organizational point of view. I heard at your conference that one of big multinationals, which of course has its subsidiary in Poland, created a special team of 20 people, World Center of Transfer Pricing, 20 people in Poland cooperating with more than 400 people around the world, focusing not only on taxation areas, but gathering various documentation. Mm-hmm. What it means in practice?
Well, this is correct because the BEPS program introduced by OECD requires not only the documentation for transfer pricing, but also transfer pricing transparency. So all the multinationals, but again, as you said, also the small capital groups need to show to the tax authorities where they pay the taxes resulting from the transfer pricing issues, so from the intercompany transactions. So they need to not only to prepare the documents themselves, but they have to calculate the prices and double check within their organizations how the pricing is calculated. And when you have an organization of over 3,000 companies around the world, and these are often the cases, so you need to engage like over 100 or 200 or even 300 people who deal purely with transfer pricing, how to calculate the prices, how to budget their company budgets in terms of transfer pricing compliance. So this is a huge project within the multinationals that have to be dealt with on a constant basis.
The example I gave was the one big multinational oil company, which of course is a big organization. But can you say what it means for smaller companies operating, well, in Polish market? But I can imagine quite easily 5 related companies, limited liability companies, which have some transactions between them.
Yes, so the rules for them are basically the same. So they also, whether they are multinational giant or a small capital group in Poland, they need to follow the transfer pricing rules. So the market standard need to be set regardless of the size of the company. There are some limitations to the rules for them, but on the general level, they need to still follow the arm's length principle, basically. So they need to prepare the documentation and they need to set the pricing accordingly. Otherwise, they will be penalized if the pricing is not correct.
As far as I know, there are some levels of turnover obligating for more documentations.
Yes, so basically in 2017 and 2018, we in Poland had some rules saying that depending on the size of the company, calculated based on the turnover or the cost of the companies fell into the 3-tier approach of documentation. So basically the local file documentation or the local files supplemented with benchmarking studies, or finally the master file documentation showing the transfer pricing of the whole group.
This is not only the matter of obligations for the taxpayers, but at your conference, I met representatives of Polish Ministry of Finance who said, yes, we try to learn. We have more and more sophisticated database on world transactions. So watch out.
This is actually a very good point because the Polish tax authorities or the representatives of the Ministry of Finance were again very innovative in verifying the transfer pricing among the Polish taxpayers. And basically, starting from 2019, there is a new report for transfer pricing that needs to be filed to the tax office. This report is called TPR, Transfer Pricing Report, and the taxpayers need to show how they calculate the transfer pricing for their transactions and what is the benchmarking for their transactions. So basically they have to be fully transparent in showing the transfer pricing they have within their capital groups. So again, the tax authorities are starting to build up their own database for checking which taxpayers are correct when it comes to transfer pricing rules.
And they adopt still more economic view, as far as I know, more economic than legal.
Yes, this is correct, because now they are focusing basically more on the numbers themselves rather than the documentation and how you follow the legal rules of transfer pricing. So you need to show the numbers, you need to show how you're building your competitive advantage against your competitors on the market because you're showing your own pricing of your goods and services.
So businesses beware.
Businesses beware.
I mentioned a sort of game between taxpayers and the tax authorities at the beginning. And I have an impression that this game is more and more often won by the computer players. I mean those companies who operate virtually on the web. I wouldn't mention the names, but I would mention an idea of replacing all those sophisticated rules of transfer pricing by a simple digital tax. Some countries in Europe, including France or Czech Republic, have already introduced that. What's your view on that method?
Yes, this is a huge issue right now on the global scale when it comes to taxing businesses, because as you said, there are more and more players who are either doing the business virtually or even some part of their business is digital, so without the physical presence on the market. And of course, the local jurisdictions are trying to collect the tax from these businesses, whereas their headquarters are in different countries. And also on the level of OECD, there is a huge discussion on the digital taxation because, as you said, some countries already are starting to introduce digital tax, basically to simplify the rules, even neglect the transfer pricing issues, just to have the tax in their local budgets. Tax budgets. My view on that is it will be a challenge to have all the countries to agree on the certain standard of digital taxation, because there should be there have to be transfer pricing involved also in the allocation of the profit that should be taxed accordingly in different countries. And so therefore you cannot simply say that some unilateral measures, so a single country can tax their digital businesses as they wish, because of course the businesses are international, therefore some international rules should apply.
I think we need to develop this subject in the next broadcast related specially on digital tax. But now our time is over. Thank you very much. My guest was Mrs. Anna Wcisło from Transfer Pricing Team at CRIDO. My name is Paweł Rochowicz. It was Rzecz o prawie, the thing about law. Thank you and see you again.